with a singular legal framework, with a singular market, with a singular everything. Maybe the languages differ a little bit, but in general we get by. Africa is not just a 50-plus country. Africa is also within Kenya, split within the west, south, and east. So it's an extremely fragmented market, and therefore, whilst we've seen some amazing success rates in India because of its market size, we have kind of lacked that on the continent as yet. And I think we can touch a little bit about that a little later on. How does one create unicorns on the continent, etc. The fallacy that we all tend to fall into is we talk about Africa as if it's one country. It isn't, and I think that's creating more problems, even though from a marketing spell it actually sounds really nice. It is extremely far from the truth. And as a result, you are seeing a lot of business models that are coming up on the continent which find it difficult to scale, which you tend to see otherwise on the Indian subcontinent, right? So I think there are many similarities, but the differences means that we have to have a very different approach to how we think about entrepreneurship and growth.
Absolutely, I think you make a pertinent point here. The lens of looking at India as one unit and Africa as 54 different units, I think that lens is really critical every time we talk about the ecosystem level parallels here, Ashish. Thank you for that. Yes, Akshay.
Maybe since Ashish has really touched upon the heart of the issue, I think that is the crux of it. But let me draw everyone's attention to a few other dimensions. I think the other aspect we have to think about is not just in one country but across the board. I feel there's a very different income level at the baseline consumption patterns. So, you have the top 5% in India, maybe the top 25%, then going down to top 50%, and then you have the bottom 50%. Yeah? That breadth and depth across this income scale is quite different from the breadth and depth that you have in this income scale in most countries in Africa. There might be a few exceptions here or there, South Africa being one, maybe Egypt to some extent on the other side. But if you look at it more broadly across the 54 countries, that's one big thing which does impact how a business can scale. So there's that disparity, right? There's also, in my opinion, what I see, a very big delta on things which in the last, say, 15 years have been transformed in India, such as direct benefit transfers to the bottom of the pyramid, which is clearly not happening in Africa. And you see the same challenges where how does the grassroots individual have access to education, healthcare, basic facilities, consumption. I mean, you cannot spend on consumption if your son's school fee is 6,000 shillings a quarter. I mean, it just like, somebody in my house was telling me that's the fee he pays. And I was just amazed that you will not get access to free education. Right? So you can imagine what that does to consumption. So I think that's a second baseline difference. The third is, I would say, policy framework and implementation of policy framework. Again, it's not that India's had a phenomenal track record for 50 years, but I would say that in the last 20 years old, it's definitely come a long way in terms of saying, how do we ensure that policy is designed but implemented effectively so that you have an impact on where the impact needs to happen. An example is capital allocation, debt. Debt availability to small and medium businesses, debt availability to agriculture as a sector, debt availability to areas which require capital. How does the government or central banks implement that policy? So I think I'll stop this. This is a long conversation.
No, but I think Akshay, you do make a very important just 50%. However, in Africa, I see that the middle income portion is somewhere either missing, if that's safe to say. Akshay, thank you for that. Sheena, yes, we'd like to hear from you.
Not great to go last when they stole all my points, but I'll like to take her in with some examples. So, for example, both the points made are on the policy implementation, right? So I do a lot of the work on the policy side. And it's not that the policies don't exist. So to give you an example, we talked about India being one market. I think it's a huge opportunity. Africa being 54. But we have AFCTA, which means actually we should be able to have one market, right? And it was implemented yesterday, like it's been around. Secondly, we talk about the currency. In India, there's one currency. Remember, in Africa, actually, if they get one currency, we deal in dollars. Like, it's mind-blowing that I have a business in Kenya, I'm doing business in Uganda, and I do it in dollars. Like, we, as a continent, we lose $5 billion annually just on currency exchange. Do we have a policy in place? Do we have solutions? Yes, it's something called PACS, which was introduced. Again, it's been about 3-4 years, 2019, 2020, when it was introduced. What PACS means is that as a Kenyan business, I can trade in Uganda in real time in my own foreign currency, and a couple of banks have joined on. But it hasn't come. It hasn't. Third, another practical example on the ground, right, is the cost of travel, free movement of goods. It's actually easier for my business to get something from China or India to Kenya, right? And then instead of taking it from Kenya to Uganda, actually get it again from India or China to Uganda. It's more expensive between China and between India and between Kenya and Uganda. So intra-Africa, I'm sure about East Africa, I haven't even introduced West Africa. So we have all of these things in place. We've talked about these problems. We know them. We've even got the solutions, the policy in place, but we don't seem to implement. We'll still be talking in dollars. So that's the other example in terms of policy and markets. And then same thing with sort of regulation. I think regulation is super important, right? I'm an ex-lawyer, I used to be a lawyer in London for 10 years, so I'm not one to say we don't need law. But in Kenya, our success stories are passed on. I think we succeeded, not because of the regulation, but actually because they just didn't know what they were doing and it was quiet and we managed to kind of get on. Now there's a time to put regulation in place because now we understand it better, and in fact that's not coming. So to give you an example, I used to work with the FCDO, the British government here, and one of the things we're trying to do is help kind of startups like insurtechs, fintechs, scale across the markets. One of my programs is on insurtech, and we have the Kenyan regulator, we know them very well, and and we said, can we get all the regulators, Kenya, Uganda, Tanzania, speaking, so that if something is approved here in Kenya, regulation-wise, it can work in Kenya, Uganda, Tanzania, because right now, any sort of innovative tech, because we have a lot of cool tech solutions that are coming up, and for them to scale, even across East Africa, is insane. They need to speak to different regulators, and license fees, and time taken. So market access is difficult, and I think even more than capital, if we opened markets so that you have consumption, and Akshay's point is valid, we don't have enough consumption at country level, like definitely not there. But at a continent level, if it was made easier, we have consumption numbers.
Sure. I think Sheena does bring in some critical examples from the ground that entrepreneurs would face on a daily basis. These are real struggles that she's got into the room. I would also want the three of you. So since all three of them come with a lot of experience of working with entrepreneurs across different industries, Ashish with all the work that he's been doing in impact investing, or Akshay and Sheena with your exposure to entrepreneurs through TIE, do you want to tell us a little bit about the common pitfalls that people would face, entrepreneurs would face when they enter the African market? What are those common mistakes, those common areas where people get stuck?
I'll talk a little more about, again, because we've had the fortunate experience of having done this in India for 20 years, and 20 years in Africa. I think it's your statement, when entrepreneurs enter Africa. Wrong. We think entrepreneurs should be from within Africa, right? And the biggest problem that we're having in Africa today is there's a two-tiered system, where expatriate entrepreneurs, and there's nothing wrong with expatriate entrepreneurs, but when they dominate a continent's entrepreneurial landscape, you ask the question why, and that's because I think there is this ecosystem where they tend to know where the funders are, and the funders tend to, there's, so if you actually walk around Nairobi, you'll meet the same 50 to 70 people. You go to Bombay, you go to Delhi, you go to Ahmedabad, you will not find one expatriate, right? And the ecosystem is extremely well versed with one another, right? So you know funders from all over the place, you know different business ideas. Sitting in Nairobi, I get about 5 business plans to 10 business plans from India a day. I get, on average, 3 business plans from African entrepreneurs in Africa, despite me being local, even though I'm Indian, I'm Kenyan. And that just kind of tells you one of the problem statements that we have to break, right? So we have to break into the mass entrepreneurial talent pool that we have in Africa, which we're not. The second, the other issue is about focusing on where we think the big unicorns have been created. One thing that we lack in Africa is that we haven't created enough unicorns or large businesses to tell young people that you can actually become a wow factor. Today, in India, it's the 3rd largest unicorn producer in the world, right? US, Silicon Valley, China, India, and then it's the east coast of the US back. So when we are collecting money, on average, and this is just the ecosystem play again, we run a $160 million private venture fund in India. Over 50% of our capital comes from within India, right? From high net worth family offices that have made money from their unicorns, whereas we get 0 from domestic investors in Africa. So we haven't, as Africans, figured out how do we make money from our own economies, and therefore we have to figure one of those areas out there. How do we actually change this? And part of the issue has been that we've taken a very Western approach to life and just superimposed it in a fund structure, which quite frankly doesn't work here. And therefore we have to think about something different.
Sure. Thank you so much, Ashish. Also, I think he did make an interesting point here when he said that entrepreneurs should not be entering Africa, really. I mean, the focus has to be building entrepreneurs here within Africa. I think that is very, very powerful, Ashish. Yes, Akshay, please.
I'll just, again, I'll pick up a few points from Ashish and talk about them a little bit more. If you look at it, India is probably now in, let's call it, the 2nd or the 3rd cycle of quote-unquote first-generation entrepreneurs becoming very successful. So the first generation was very successful, that's almost 15 years ago, and I'm assuming every cycle is plus minus 5 years. Yeah. So 3 cycles have happened, and that is just a time scale disadvantage that we have, because we started a little, maybe we got into the game a little later than the comparative country here. But that makes a huge difference to capital availability. I feel that one of the challenges we have in Africa is that if you look at the super large successful business owners on this continent, they aren't investing in startups. That's the honest answer. It's not because they don't have the capital. I think, I'm not sure, my hypothesis, they don't believe it. Yeah? Or they don't believe that this can be done in Africa. And that's unfortunately and I'm talking more generically, so it's not to single down on anybody who's a successful entrepreneur. But even in India, it was not very different. It was not that Reliance was going and funding startups 20 years ago. They were not interested. You went to them for funding, no one in that family would talk to you. Yeah? But it is the Vijay Shekhar Sharmas, it is the Karan Wells, it is all of these guys who become successful first generation entrepreneurs themselves, created a lot of wealth for themselves, and who have then believed in this ecosystem and have funded those guys. Yeah. So we have not got there yet. Too bad. I mean, it'll happen in my belief, but I think we need a little bit more time. So maybe
that's really big, and it's a very interesting insight, Akshay, that you made. The Zomatos of India did not come from the Tatas or the Reliance, they came from a Naukri. Or it was Kunal Bell who actually succeeded at Snapdeal, and that is how he realized that this is a space that is investable and highly dependable.
And more importantly, the Tatas and Birlas and the Reliances came to the table. After all these guys invested, they became successful investors, they made money, and then they said, okay, no, oh shit, we missed this. You know, I mean, we didn't do this, let's start doing this.
It was more FOMO than taking the first leap there. Yes, Sheena.
Right, so again, Priya, I'm just going to build on both the points, and I think they both touched on it, which is in Africa, we say we don't have local capital, but we're not investing that local capital in entrepreneurship, and I think you're right. Having said that, one of the reasons is, whilst there is local capital, because it's our mindset, and I think Ashish, you touched on this earlier, we followed a very different path to India, which is we're very development heavy, we're very donor heavy, we're very aid heavy. So even the businesses, when you speak to them, it's not that they just sit with their money and they're greedy and awful mean people. No, they do a lot of charity work. If you look at the amount of charity work that is done by the rich African businesses, there is quite a lot that's done. But that's that mindset. Let me build a well, let me build a dam, let me do, which is great because it's needed, because unfortunately, as I think Akshay said earlier, our government hasn't done that. So that's where that money has gone. It's gone, I've made my money, I'm going to do some charity. But that will never uplift us as a continent. We need to move to the entrepreneurial mindset. So the money is there, it needs to be directed to that way. And I think that's one thing. And it goes back to Ashish's point. The reason why foreign founders or expat founders get funded, because the majority of the funding comes from there. We don't fund ourselves. So at the moment there's this issue going on around African pension funds. Should pension funds, because there is money there, should that be used, should that be allocated? But the VC model doesn't work here. It hasn't. We've seen it growth at any cost. It cannot work here. We need sustainable, profitable growth. Now that's the finance side. But what about from the entrepreneurial side? Now I work with young entrepreneurs all the time. Like this is literally what I do. Yeah. Now one of the issues that I also have is we are too and I'm sorry to say this, but we're too obsessed with unicorns and all of the rest of this, right? And I'm saying, unicorns and disruption and innovation, how can we disrupt in Africa when we haven't built? You want to disrupt the ag sector? Build it first, please. What we need here is actually boring businesses. We need manufacturing, we need value addition, we need cold storage, we need all that stuff that just doesn't sound sexy and nobody wants to fund, and no young person says, hey, today I built maze milling or whatever it is. But that's what we need, And I'm not saying you can't leapfrog in all these fancy words, you can. But until we don't build those basic businesses, and what's super exciting is, because we have tech and innovation, we don't have to build it the same way the West built it, India built it. We can build these businesses that are tech-enabled for scale, for data, etc. But we must start focusing on boring. And so what I would say what we need is, not the big VC deals, that would be great, and there's some. We need smaller PE type deals, and I think smaller PE type deals. We need debt, affordable debt, local currency debt. Those boring things are going to be so much more impactful than all the time.
Probably a good way to put it would be boring businesses done creatively. With tech and innovation coming in, I think you do make an important point here. Ashish, I feel you want to add something, yes?
Boring is Ashish's favorite word.
Exactly.
So he has to
She set up the cue for me, saying, hence why the credit fund that we've set up is for boring businesses, which are mass employers, build Africa, right, from foundation up, which is agriculture, light manufacturing, not even heavy manufacturing, logistics, everything that Africa needs. And we said, well, no capital returns here, so let's just do that. Hence why we put the entire strategy. I'd just like to add on her point, Sheena's point, which is we don't have to think about, and this is to our Indian partners, and I really encourage this key message. We don't have to think about Africa as a consumption story. Think of Africa as an export hub. Africa is a $3 trillion+ economy, which is about the size of India. But the products that we produce are $50 trillion market that we can address, right? And it is completely virgin right now. We have done nothing, and Indian producers, whether it's agricultural producers or minerals or whatever, there is a tremendous opportunity that's just waiting to be harvested here. Nobody's touched it.
Sorry, I know you're running out of time, but I just want to make one point.
Yes, please.
Yeah. I think the other area which this ecosystem could really benefit from, and Ashish talked about it first, which is why is it that there are so many expatriate founders setting up businesses over here, and successful, not successful, let's not go into that. But I think there is also a gap on the founder side, which I think some of us at TIE and maybe some other smaller organizations are trying to address, is how do you get a typical African founder to have the same level of exposure and thinking around business model, capital raising, size of market, go-to-market approaches, etc., to build a successful business in Africa. Yeah. And how do you get them that knowledge? And if you can get them that knowledge, there's no reason they can't succeed as much or even more than some of the expatriate founders that are coming into this continent to set up a business.
Absolutely. That also brings me to my last question to this panel. We've been talking a lot about the macro level or the policy level changes that should come in, or how the situation is when you look at the bigger picture. But would you please zoom in and give us one point on what an Africa-based entrepreneur should look at in terms of skills? What is that one critical skill which is needed to navigate this space better?
Oh, great. Oh, thank you.
I made it more tough when I say one.
Honestly, I think the one sort of skill is this idea. I think it's a soft skill actually, and it's being resilient. Because building a business in Africa is hard. It is not building one business; it's building 4 businesses, right? And I'll give you a really silly example. When Netflix first started, I was in the UK, and it was dead cheap or something. And I put on my direct debit. My sister went, she's 10 years younger than me. She went into university and she goes, oh, Sheena, please, I'm so broke. So I said, fine, use my Netflix. It's now like 20, 30 years since, right? All her friends use my Netflix account. I think it's gone up to like 5, 6. I don't know how much it is, but that direct debit still comes out. I live in Kenya. I pay Netflix and Pesa every month. Some months I forget to pay. So you see, in terms of the business model even, in terms of continuity of payments and things like that, it's really, really difficult because you're building your business, but you're building the distribution, you're building the financing, you're building everything. You're building 4 businesses in one. So you need resilience.
Okay, thank you, Sheena. Resilience it is, she says. Yes, Ashish.
I would say entrepreneurs here, they should look for products that's solving a problem, and not a product for which they will create a problem, right? So a lot of things that we're seeing here is a me-too model that's not really solving a problem, and that's something that we need to learn better. And of course, I think for the local entrepreneurs that are from that mass market that I'm talking about, they just need to learn how to articulate that into a super pitch, which is what our expatriate founders are great at doing.
Great. So Ashish says it's about solving real problems and not creating products and then creating the problems first. Yes, Akshay.
I think having, I think African founders, and this is a more general statement, you're not an African founder, you're a Kenyan founder, you're a Ugandan founder, you're a Nigerian founder, as the case might be, right? And so, I think all of us, whichever nationality we all love our respective countries. And so we have a automatic predefined home bias in the way we think about approaching the problem statement, which is great when you're trying to solve a problem in that country. The only challenge in Africa that we go back to now is the problem you're trying to solve big enough for it to scale effectively? And more often than not, unfortunately, the answer is no. And because the answer is no, as a founder, you need to be open to be in not one, but at least 4 or 5 countries. And I think if we could find a way of getting founders on that page from day one, then they have a better chance of scaling.
Great, I think Akshay says that it's important to not just go by what we've conditioned or how we've been brought up, but really look at what is the possibility that lies. And I think we would also want to sum up the panel by saying that there is enough possibility in the continent. It's important that we deepen our lens, we zoom in a little bit more and look at 54 constituents rather than just look at Africa as one place or one legislature, because it is not really so. Thank you so much for bringing in some ground level examples, some great ideas for us to look at how we can scale businesses here, how you look at impact investing, and why we need to look at solving the real problems and then looking at scaling businesses. Super. Thank you so much. Yes, actually, you want to add something? Okay, super. Thank you so much, and looking ahead to hear more from everybody on this. You have a question? Yes. A very quick one.
Okay. Good morning. I'm Parikshit Trivedi, a management consultant. I came to Kenya about 2.5 decades ago. My question is, I transitioned from employment to self-employment. I saw a gap in the market of affordable management consulting services for businesses to scale up. All businesses cannot afford the big five like KP and JD, with due respect to them. And I successfully managed to get a market for it. So what I want to share as a thought is, as you rightly mentioned in the conversation, is we lack a we need a broader base of consumer base, which is middle income earners. Because any economy is fueled and grown by the middle income consumers, middle class. So we have to work to scale up enterprises in a way that the middle income earners increase in number as well as in volume, which definitely fuels an economy. And it's a balance of hard skills and soft skills deployment through consulting, affordable consulting services. How we can scale up businesses, not only in Kenya but East Africa.
That's why we talk about boring businesses. Yeah? So thank you so much for that thought. I think it's very pertinent. Yes, we will now take it from the stage.
Thank you very much.
Yes. Okay.
I hope we were able to make up for the keynote speaker.
Got it.